It's July 2025 and the market's a roller coaster. Why? 3 big reasons. First, Liberation Day tariffs just sent the average US tariff rate soaring from 3% to 13%. That means higher prices for imports, and you'll feel it at the checkout. Second, the Federal Reserve is holding steady. Chairman Powell isn't cutting rates yet, waiting to see how much inflation these tariffs unleash. The odds of a rate cut this month? Just 21%. Third, the US dollar is at its weakest start since 1973. That helps exporters but makes US bonds less attractive to foreign investors. This triple whammy, tariffs, a cautious Fed, and a weak dollar, has markets on edge. Higher tariffs mean rising costs and squeezed profits. Inflation eats into your savings, and companies struggle to pass on costs. The result? Volatility. One day up, the next down. But in chaos, there's opportunity. Don't panic. Have a plan. The storm is here, but smart investors know where to look. Let's find out how. Amid the noise, big tech is doubling down on the future. Capital spending is up nearly 10% this year, billions flowing into AI data centers and infrastructure. Companies like Nvidia, Microsoft, and Amazon are betting big on long-term growth, not short-term headlines. This capex boom signals confidence and sparks a ripple effect benefiting chip makers, cybersecurity, and cloud providers. The AI revolution is real, and it's creating new winners across the tech food chain. Want to ride the wave? Look for the companies investing and those supplying the tools. Ignore the panic. The smart money is following the capex trail. This is where tomorrow's leaders are being built. Wall Street's biggest players, BlackRock and Morgan Stanley, see opportunity, not disaster. They're steering clear of long-term US Treasuries, favoring short-term bonds and euro area debt for flexibility. On stocks, they're bullish, especially on US tech and AI leaders driving the capex surge. Morgan Stanley predicts the S&P 500 could soar nearly 25% by year's end. Their advice? Buy the dip, stay nimble, and focus on innovation. Don't get stuck in long-term government debt. The real story is the strength of companies investing in their own growth. The pros are loading up on opportunity. Will you? Here's your 5-point plan for a winning 2025. 1. Move out of long-term treasuries. Shift to short-term bonds and tips. 2. Stay invested in US stocks, especially tech and AI. 3. Hedge with gold or commodities, 10-15% for inflation protection. 4. Diversify globally. Emerging markets and foreign stocks benefit from a weak dollar. 5. Keep cash ready. 6 to 12 months of expenses for when opportunity knocks. A balanced portfolio, 40% equities, 25% short-term bonds. Tips: 15% gold, commodities, 10% international, 10% cash. Review and adjust your portfolio now. Don't wait for headlines. The market's a battlefield, but you're armed with a plan. Take control and make 2025 your year.